Hello everyone. We've just released our interim results for the 2025 financial year. Our first as Valterra Platinum, the world's leading independent producer of PGMs. I'd like to thank you for your hard work, which has contributed to our first half performance, and take you through some of the highlights and the significant outcomes of the last 6 months. Regrettably, during the period, we experienced the loss of Felix Kore at Unki in April this year. And on the 22nd of July, just after the close of this interim period, we also lost William Nkenke at Amandelbult's Dishaba mine. Our heartfelt condolences go to their families, friends and colleagues, and we're providing comprehensive support during this difficult time. We've taken all the necessary steps to learn from these events and to address the contributing factors to prevent reoccurrences. While we mourn these losses, we also recognize the achievement of significant safety milestones across our operations, which reflect the dedication of our teams to progress our journey to zero harm. These include being 13 years fatality-free at Mogalakwena and Mototolo, 9 years fatality-free at Amandelbult Tumela mine, and more than 2.5 years of lost time injury-free days at our Polokwane smelter. We've also seen an improvement in our total recordable injury frequency rate of 12% to 1.46. The first half of 2025 was also tremendously significant in the history of our company, and at the end of May we celebrated the completion of our demerger from Anglo American, establishing our company, Valterra Platinum, as an independent global PGMs producer. Through a highly successful Capital Markets Day, investor site visits, and other numerous engagements, we've highlighted our outstanding prospects and investment case as the world's largest listed PGM producer. Our leading integrated portfolio of long-life assets has drawn considerable interest from investors, and our own market capitalization has risen by nearly 50% over the last 6 months. We also completed our secondary listing on the London Stock Exchange in June, which I believe will allow a deeper pool of global investors to participate in the ongoing demand for the critical minerals that we produce in Southern Africa. And as part of our strategy of unlocking value within our portfolio, we completed the Sunsloot Underground pre-feasibility study, and the board has approved the commencement of the feasibility study, which we plan to complete in the first half of 2027. The Sunsloot Underground at our world-leading Mogalakwena asset will allow us to continue our approach of value over volume, drive up our underground grades, and drive down our all-in sustaining cost. Before I move to the production performance for the first half of 2025, it's important to mention that the realized PGM dollar and rand basket price increased by 5% and 3% respectively to $1,517 or 27,630 Rand per PGM ounce. To complete the context of the last 6 months, in February we experienced heavy rains and flooding at Amandelbult, with the Tumela lower section the most severely impacted. While all the sections of Amandelbult have recommenced production, we fully expect to ramp up to normalized levels in the second half of 2025. The impact on our first half-year results was significant, once again illustrating the importance of Amandelbult and its prill split to the portfolio of Valterra Platinum. Our own mine PGM production of metal in concentrate declined by 12% to 926,000 ounces, primarily due to the flooding at Amandelbult. So this meant our own mine production, excluding Amandelbult, was similar to 2024 at about 770,000 ounces. Purchase of concentrate volumes declined by 23%, primarily due to Kroondal's transitioning to a 4E tolling arrangement from September last year. And adjusting for the Kroondal volume, this reflects a 5% decline from the comparable period, also reflecting the weather-related impact on production of third parties, not just the Amandelbult. PGM sales volumes declined by 25% to 1.48 million ounces, in line with our refined production volumes. I'll now hand you over to Sayuri, who will take you through the financial performance for the first half of 2025.
Cost discipline has been a significant focus for us over the last 18 months, and I am pleased to report that we have delivered further cost savings of 2.1 billion rand in the period. We are on track to achieve our full year 2025 target of 4 billion rand through operational excellence initiatives and corporate overhead reductions. Cash operating costs were 17,952 rand per PGM ounce, down 2% on H1 2024, excluding the impact of the Amandelbult flooding.
All-in sustaining costs were $962 per 3E ounce,
excluding the Amandelbult flooding impact, or around $1,200 per 3E ounce, including the flooding event. During the period, we achieved 6.6 billion rand in EBITDA, down 47% on the prior period, primarily due to the 25% decline in PGM sales volumes and the once-off demerger-related costs. Headline earnings decreased by 81% to 1.2 billion rand, and headline earnings per share was 4.73 rand. Net debt at 30th June was 4.9 billion rand, representing a gearing ratio of 0.3 times net debt to EBITDA. This was after the payment of the 2024 final dividend and the weather-related headwinds affecting operating activities in the first quarter. This is well below our self-imposed gearing target of less than 1 times net debt to EBITDA. Liquidity headroom of 27 billion rand is consistent with our ongoing commitment to a strong balance sheet. The board has declared an interim dividend of 500 million rand, or 2 rand per share, in line with our capital allocation framework, representing a 40% payout of headline earnings. We remain on track to deliver on our M&C production guidance of 3 to 3.2 million PGM ounces, after factoring the flooding impact, and our refined production guidance remains at 3 to 3.4 million ounces. Cash operating unit cost guidance for the full year has been revised to 19,000 to 19,500 rand per PGM ounce to take into account the Amandelbult flooding impact. Capital expenditure guidance has also been lowered to 17 billion rand to 17.5 billion rand, in line with prudent cash management, as well as our operating model changes, resulting in improved and more agile project execution.
The extreme flooding event at Amandelbult demonstrated our ability to rapidly respond to major setbacks at pace. The Tumela lower section was recommissioned ahead of schedule in June, with the full ramp-up expected in the third quarter this year. We're targeting between 450 and 480,000 ounces in M&C production from Amandelbult for the full year, which has allowed us to reaffirm our 2025 M&C and refined production guidance. Our operational excellence programs remain on track to deliver 4 billion rand in full-year operating cost savings, and we've worked hard to ensure that our assets operate sustainably in the lower half of the industry cost curve. Coupled with our disciplined approach to capital allocation, we continue to be well positioned to sustain our track record of delivering industry-leading shareholder returns through the cycle. To our stakeholders, particularly our shareholders, our communities, our customers,
unions, government,
and our business partners, I'd like to thank you for your support, encouragement, and collaboration in making Valterra Platinum what it is today. It's been important to take you along with us on this journey. We are a company with a strong sense of purpose, and that purpose is to unearth value to better our world. Our stakeholders represent our closest relationships with our world, and it is important to us that we deliver on our promises in bettering this world. We'll continue to deliver on these promises and to listen so that we can continue to create value for everyone connected with Valterra Platinum. Thank you for your meaningful contributions and engagements. I, together with the rest of the Valterra Platinum team, look forward to delivering our full year results for 2025.